in Asia. We're seeing this morning oil prices up 1%, and the Nikkei just sitting around its 30-year high. The equity market of Japan just sitting back at its 30-year high. Quite extraordinary. Nobody ever thought that Nikkei would get back to the heights of 30,000, but there it is. What's the top of that big mountain they have just outside Tokyo? But that's where it's sitting, up there in the sky. So let's kick off this morning. Omar Najia, Global Head of Derivatives from BB Energy, our Monday morning quarterback. Omar, the market's definitely supported by the continued outages in the US.
Yeah, so I think, look, last week when we were saying, market's going to go up and all the rest of it, it was like incredulousness, why and all this kind of stuff. So I think market's going to go up even more. And the longer that basically, like I was saying last week, as long as basically you still have this non-believers basically on one side or people who want to short, then the market's going to continue to track higher. It's the same thing with equities. So you have, I think last week you saw a lot of the major banks come and say, that's it, we've topped, better sell, danger, all this kind of stuff. And what happens come Monday morning, the Tokyo Stock Exchange climbs Mount Fuji. So I think markets are healthy. They're in very strong uptrends. It doesn't mean basically that they don't go down, but I think it means that pullbacks are buying opportunities rather than kind of, panicky, whatever. And so far, nobody's mentioned COVID and the mutant and I don't know what, blah, blah, blah. And I think it's quite clear that, people who've been vaccinated are relatively okay. So you can argue about a third and fourth shot, which who knows? But I think in general, markets look at this as kind of, glass half full. I think you've seen a lot of people go back to work in London. You've seen everybody back to work in Dubai. And I think you're going to see, everything start to continue to recover. So it's very difficult when you see, graphs with slopes like this and the money being pumped out and all this kind of stuff, to kind of think that, a disaster lies straight ahead, maybe pullbacks, but I don't think you're going to see market slump because it makes no sense. There's no, the background isn't there in terms of, unemployment getting worse. Unemployment in the US or employment in the US is, or available jobs in the US are skyrocketing. So I don't see the kind of background that makes me fearful and worried and all this kind of stuff that other people see. I really don't. So we think that WTI will move from about 70-40 where we are today to mid-80s before the end of the year. We think that the S&P will get back over its highs at 4,500, maybe get to 4,900. So we bullish the markets, good markets, buy markets.
Bye. Sara Akbar, Chairperson and CEO of OiLSERV Kuwait and a non-executive director of Petrofac. Sara, do you see any icebergs ahead in Omar's Titanic?
Well, I've been watching Omar for over the last 1 year, and Omar is a beautiful representation of this market because at a certain point he was really pessimistic about what's coming, but now he's really optimistic. So he just reflects this market perfectly. The only iceberg I see actually is shortage of supplies. So I think many people believe that we have some closed capacity in certain countries and that, if we are at the corner and we are stuck, we can open up this capacity and we will be fine. The reality is completely different. I think there isn't much capacity closed anymore. There's probably few left that can actually quickly bring growth to the market, but the majority actually can't. And this is the true iceberg because at that situation where you have the serious demand, and there is no doubts about the way demand is gone up and driven by the economic activity and the optimistic view that you see in the market. But I think the problems lie in the supply side. And I think, if you look around, in time, it's a matter of time, but in time, there isn't enough supply to cater for all this euphoria in the demand. And that's the real iceberg, because, I think with time, you will see if we don't really inject serious capital into the supply side, by 23, we will have serious shortage of supply that can cater for this demand. So this is the thing. And I think going back to the $100 is, under these circumstances, is not far away.
Chris Wood, CEO of Savanara DMCC. Chris, welcome back to the table. Looking more specifically at events in the US over the last 2 weeks since Hurricane Ida, the really slow recovery of production. We're still well over 1 million barrels a day out. It represents a majority of the production in the Gulf of Mexico on the US side. Given the scale of this event and how long it's been prolonged, oil prices are only incrementally climbing. Not a catastrophic event, not a lot of concern around.
No, it's you're right there, Sean. It's you would expect a bigger jump in the oil, but you got to remember we're still in a supply constrained recovery on the oil price. We've still got OPEC sitting on 4 million barrels available to be deployed into the market. So I think the market is very aware that we're not at an exact shortage, that we're not going to hit a roof of supply capability. So from that point of view, I think on a global perspective, there will be pockets, I think, where you will see some shortages. But on the whole, I don't think it's going to drive oil prices up too high. Plus, I sit on the sort of middle of the fence on this one. Omar is always quite bullish on the recovery of COVID. We've got Israel still talking about now putting a 4th vaccination out for the new variants, and we just seem to have new variants coming out and testing the capability of the vaccines that we have. Whether that's going to have a global disruption, who knows? We're seeing it having a knock-on effect in the supply chains, where ports get closed, and then there's various supply chain shortages globally. So I think we're not out the woods, but it's looking optimistic.
On the physical side, Chris, the dislocations triggered by Hurricane Ida, obviously production out of the U.S. Gulf Coast, the different products that are not being made, how is that impacting the market?
You're starting to see, and I expect to see more of it, not just in oil products, but in petchems and other products. You'll start to see some ARBs opening up east-west. Particularly around Europe, moving more product into the US. So I would expect as demand goes there. Omar, who's trading on a daily basis, his team will be probably better answered to see what sort of ARBs are opening up, where they're coming from, where the opportunities lie. But I expect sort of on a macro point of view that Europe and Asia will be looking at those, particularly Asia with its length, to try and fill some of that, although quicker from Europe than it is from Asia to get to the East Coast.
Omar, I welcome your thoughts on that as well. I mean, how do you trade the sort of bullish sentiment when you have quite a collection of sort of bearish points? I mean, or bullish points like the outage in the U.S. The U.S. Goldman Sachs downgrading outlook for U.S. growth still strong, but definitely downgrade. A lot of the indicators seem to be pointing. As you said, there's more jobs in America than you can shake a stick at, and still we're not seeing what you would think is the greater elevation in prices. There's a dampening sense to this movement. Your thoughts on that? These two things together.
So the oil prices are not correlated to the S&P at all. They're not correlated to the dollar at all, even though people think they are. They're not. If you look at studies, they're not. You can look at anything short term, and you can say, within a day or a month or a week or whatever it is, orange juice futures went up, and so WTI is related to orange. No. So bottom line is, what's driving this market is basically the lack of investment. I mean, it's not just about the headlines today. This lack of investment has been there for years, for at least 10 years. So this lack of investment comes home to roost. That's one. Two, you have active management of this market by OPEC+. Why? because the wider world has said that, we don't want you anymore, we don't need you anymore. And the wider business world has decided, I think wrongly, that we're not going to invest anymore. So you add all this stuff together, and you add the fact that if you look at energy markets in general, you look at natural gas prices, you look at coal prices, you look at everything, where are they going? They're going up. So basically, to kind of think that no, oil prices aren't going to go up because somebody has spare capacity is not true. Can OPEC Plus flood the market with oil and shoot itself in the foot? Yes. Can the Fed all of a sudden say we're withdrawing all liquidity from the market and collapse the global economy? Yes. Will they do it? No. Is it? What's the probability that they do it? It's quite small. So if you're trading, you will go with the bigger probability, which is OPEC Plus holds course because it makes sense. The Fed holds course because they need to, otherwise we hit a brick wall, et cetera, et cetera. So I think basically the things playing on oil and energy are much deeper than basically headlines that you see today. And, is there going to be a third vaccine and how all things, blah, blah, blah. I mean, people have been talking about this COVID for I don't know how long, and the market's just gone straight up. So
ultimately, the market, obviously, literally on contract terms, is trading November, and really is moving more from the point of view of what next year looks like rather than next week. Sarah, given the opportunity, as you articulated earlier, for oil producers, and given that the oil majors just don't want to put their money in their pockets at the moment and start spending, should the NOCs, should the Gulf Middle East NOCs be doing a lot more to seize this moment of opportunity that, clearly, as you indicated, you could see $100 by 2022, 23 maybe?
Well, Sean, they are. If you notice, there is serious investments going into the oil and gas. I mean, if you notice, I think the biggest capacity that can come potentially to the market is actually from Iraq, because they have plenty of discovered reserve that's not being developed. And I think last week they signed this big contract with Total that will include some field development, some green energy, solar, whatever. But there is huge potential there. Like I said, you do need investment, but everybody else in the Gulf, they are on that track. You see the UAE targeting 5 million, Saudis talking about 13. I really don't know if they can achieve 13. Kuwait, they seriously think about some EOR projects and several things now on the play to capture this.
Kuwait has struggled in recent years to sort of follow like the UAE or others to advance its capacity.
Well, Kuwait needs structural change in the way we do business in order to catch up. We are still living in the old kind of world of NOC trying to do everything on their own and, not successfully, unfortunately. But the potential is there. I think it's all to do with the way we will manage this industry. We can definitely add to the market, I think, up to 1 million barrel if we put the right investments into the right fields. But at this point in time, I really don't see those actually happening. But elsewhere, like I said, they know that this is the last cycle of oil price that they can capture before they have to, to diversify their economy. They need this capital. So every plan you see in the region has that same target. Let's maximize our production for the next 5-6 years, because this truly is the last cycle for the oil. And it's the same motto, you hear it everywhere.
Chris, we talked a little bit about the dislocations from Hurricane Ida in terms of where products and crude may be moving, even a lot of Russian crude coming to the US. Also, we have now the dislocation potentially of this gas price, LNG at $20 per MBTU. So there's clearly a big event happening on the gas side. I'm wondering from your perspective how that may impact on the oil side, higher sulfur fuel oil and so on.
Well, yeah, you're right there. I've been watching that. The gas prices have been climbing nicely. There's a lot of noise in there that the European stocks are not as high as they should be entering into winter. So that's going to continue to put a bit of pressure on global gas. So anybody with some gas length or gas shipping is going to be looking pretty at the moment. I expect that we will see some spikes, particularly in the gas price. What's that going to do to oil? Probably less so from a historic point of view. We have less oil-fired capacity, less coal-fired capacity than we do today. Therefore, I don't think the driving gas price will drive oil prices too much, but they do link a little bit, and they will drag the oil price up a bit from that point of view, but not to the extent that we're seeing on gas right now.
Omar, looking at the big sort of stories or data points coming in the immediate term, obviously we have the central bank, the Fed, back at the table next week. We've got German election, new chancellor, Canadian election. Do you see any of these events as issues or something that the markets, the oil markets, need to be watching? Are they potentially impactful?
No, because everybody's trapped, right? So the Fed's not going to do anything because they're trapped. So they're not going to ease or taper or do whatever it is that they keep saying they might do because they're trapped and they can't. Merkel is basically, you know, that's it for her. So it's going to be a change of the baton, basically. I mean, politically, it's quite interesting, but yes, I don't think any of.
I mean, we have seen in Norway a sort of arrival in the recent election of a left-green government. In Germany, the indication is we could get something similar. We have COP26 coming. Any of those aspects, do you think, elements to impact where one trades the market?
No, I think basically longer term, you keep seeing the stuff about green and energy and electricity and all this kind of stuff. And I just, you know, it'll be really interesting to see how all that happens, how this electricity gets generated by wind farms and whatever it is that they're going to use to generate it. It's just not happening. It's just not happening quick enough. So basically the stuff that, you know, alternative energy sources are minuscule compared to everything else. And it's like vogue. It's like en vogue to keep saying green and yes and recycle and all this kind of stuff. And I really don't see how you do it. I really don't see how you do all this, you know, how you meet the energy demands of the world with all this green stuff. I mean, you know, I really don't. And I don't know.
Because you can still get policy changes that can be impactful even if they don't make sense, right? It would be the first time for governments to issue policy changes that have impact but not logic.
Yeah, it's basically really expensive. It is very, very expensive. And I just don't know how they do it. And maybe if it gets expensive enough, which is what I think we're talking about, maybe if it gets expensive enough, then oil can get to 100 or maybe 150 or 200 or whatever. So, you know, I think I like oil in the long term, 5-10 years. I like it because, you know, people seem to forget how useful it is, you know, how easy it is to carry around, to transport, how much energy is in.
Just have to figure out how to capture that carbon. Sara, given the points Omar's making and what you said earlier, why do you think we're not seeing this production come back? Shale still moderately creeping up, but nothing. The supply chains still, the oil services side still struggling severely under these conditions.
Yes. So the main reason is actually investments. You know, our industry is a very capital intensive kind of business. And if you put the money in the ground, you will get oil. If you don't, you don't. So going back to the point that you were raising about green and this whole world that is emerging and the impact of COP26.
Which is just around the corner, and then there's big expectations that it will deliver some game-changing policies, particularly around carbon pricing.
Correct. And I disagree with Omar. This is real and it is happening. And I see it clearly, even in this part of the world. There is a lot of capital actually earmarked to go into this industry and not in the oil and gas. And the policies that would come from COP26 will drive this even further. And the reason for that is, if you notice this year, we've had serious environmental issues in multiple parts of the world, all these floods, all these hurricanes. It is a true reflection of what the planet is going through. And I think this is the main driver. So the money we'll be spending in trying to protect cities and coping with this environmental change is much bigger than the money we are going to put into developing oil and gas, or even into developing renewable energy. So the next really evolving economy is the environmental, challenging environmental impact economy, which is serious for the planet. And that's why I think this green, yes, people are skeptical. Oh, we are not seeing it. It is happening. It is happening as we speak. Hydrogen as a business is exponentially growing now in project terms all over the region, and in Australia and Southeast Asia and India and in Europe. So, and this, I go back to my point, this for the oil, not the gas, for oil specifically, I think this is one of, the last cycle we've seen oil go up and then maintain, I don't know, higher price and then fall, because every other type of energy is really picking up, And, CO2 is sequestering and utilization. It's become a serious business. It's a very serious business now.
Well, if you put a price on carbon, I think it'll be even a much more serious business.
Exactly, and an evolving business too. So
let's get the survey question in and give the room a view to comment a little bit on some of these issues. China releases a lot of data on retail sales, industrial output, urban investment this week, that if the expectations from the analysts is that it will show further slowdown in China from the data points coming. My question this morning is, oil markets will be unmoved as the China slowdown narrative is already baked in the cake. Whatever the sort of noise on the data points, it's already, China's slowdown narrative is already baked in the cake. Agree or disagree with that? Could it represent a moment of change if one sort of sees a continuation of those data? Chris, your thoughts on that question and China in general. We had Mike Muller on yesterday, who was speaking very bullish about the outlook for China in terms of the release from their strategic reserves being replenished and so forth.
Yeah, so a couple of things coming out of China that I'm interested in. One is a slight policy shift, the new policy catchphrase, which is common prosperity. And the question is that sort of a new socialism that they're rolling out, or is it a growing the middle classes, i.e., trying to develop a new consumer base that's going to then move the economy forward and continue to grow? And we're waiting to see what the policy.
Big article in the FT over the weekend about Alipay getting broken up. Exactly.
So it's going to be interesting to see how that unfolds. As far as then the sort of strategic reserves, I think Mike touched on it, or that it's not as transparent as we'd like it in China. It's not as transparent as we see in the West as far as reserves. So we don't officially know how much oil is sitting there. And I think they're just playing. We have high prices. We don't like to see high prices. We release. We have low prices. We replenish, and they just go through that cycle to make sure that they have enough strategic reserve to meet the days of oil that they need, but also to manage the oil price. And we've seen that in other sectors, whether it's been copper and iron and so forth, where they've released reserves to manage the price and massage the price for domestic consumption. So I don't think that's going to change the game significantly for us. They're just managing their own internal price. They don't need to have a going back to where they were in the sort of early teens, where they had huge price spikes and that cost a lot of money for the national oil companies.
Omar, thank you. Your closing thoughts on the outlook for the week ahead. Monday morning, Asian oil prices up 1%, continuing a climb we saw at the end of last week. We're sort of migrating slowly back to the highs that we saw earlier in the summer. Your thoughts on the week ahead?
Yeah, so basically, whether you look at equities, right? So you've had this China thing, and they want to, destroy this company and do this company and do whatever it is, and still the equity markets hold up. And you take a look at oil, and we're told that it's death and destruction, and never this, and that's it. And we all better pack up and go home. And what happens? Oil keeps going up. So I think basically you get more of the same. You have basically, so I forget that quote, oil markets or bullish markets are born on pessimism, rise on whatever it is, and end on euphoria. We're nowhere near euphoria, nowhere near euphoria. We're in like major skepticism, like this can't go on and we have to correct and we might go up, but not a lot and all this kind of stuff. So I think, I'm bullish. I might be completely
I mean, I'm
wrong,
not sure where obviously there is a noise around that, but my God, there's a lot of euphoria on Wall Street. There has to be. The amount of money that's pouring in is substantial.
Look at the reports last week. 8 major banks in the US said basically it's time to sell equities and the best is behind us. That's the reality. It's not, it's not euphoric. It's fear. It's worry. It's cash in now, or basically.
Well, you don't want to, as you said before, you don't want to wait to grab the last 10% and possibly lose 50. That's kind of the as you judge the US, the tightening cycle, if indeed that does start. I'm starting to get skeptical that we will see a tightening cycle because the window on it is very short ahead of the US election. And you can't have the Fed jumping into US politics up come January, I would think. So they have a very small window to move. And I get the sense they're wobbling. Let's get the survey result and give Sara Akbar the last word this morning. Disagree, the oil markets will be unmoved as China's slowdown narrative already baked in the price. 54% disagree with that view. 46 agree, at least in this room. Sara, I'd welcome your thoughts on all things Iran. There's been some noise over the weekend of meetings and the return to these talks that go on and on. How big a deal is it still for this region?
Oh, it is seriously a big deal. So as you know, there has been some discussions ongoing between the Saudis and the Iranians and even the rest of the GCC and the Iranians, and this is extremely positive. I think all what the intention now is that we settle some of these issues simply because, as you know, this week, we've had so many missiles coming from Yemen towards Saudi. So Saudi seriously wants this over. And the only way for them to get over this is if we can do 2 things. One, agree something with Iran. So the Saudis directly with the Iranians. But the second thing is this big nuclear thing that has to be settled. So that's why I feel there is a big drive now from all fronts in order to at least agree something on this agenda. But genuinely, it's a big deal for Iraq, it's a big deal for Saudi, and it's a big deal for the rest of the world as well. So, by now I would have thought we would have agreed something, but the elections in Iran and the changes and so on, I think delayed it, but eventually I think we will get there.
Well, it's hard to see also the implications of Joe Biden's failure in exiting Afghanistan and how that impacts his ability to move the U.S. body politic towards a deal with Iran. I think there's still elements there to play out, but this is going to be, yes?
He needs it. He needs it. A win in order to, kill that image that he has in Afghanistan. So
yeah. He needs a win. He needs. He probably needs a few things that I wonder if there will be attainable. But we'll have to watch that space. And what we need to do now is to wrap up with Brent climbing to 74 and WTI above $70 this morning in Asia. Everybody would be sort of watching where that goes today and through the week. Chris, thank you so much for joining us. As always, lovely backdrop there. Now, the next ad that you see the Emirates are advertising for, maybe you can get it and be the one standing on top of that big tower behind you. Omar, as always, amazing, lovely. Thank you for coming. And Sara Akbar in Kuwait, thank you so much for joining us this morning. Best of luck, everybody, this week. Trade the markets well, and we'll see you every morning at 10:30 UAE time. All the best.